Now, with regard to consolidated financial statements, we have to also indirectly we're going to cover certain standards only. So, in studying, in preparing, in understanding consolidated financial statements, there are set of standards that we need to have a knowledge on. So, which basic level understanding we had discussed at our financial accounting level. Can you recall what are those standards are?
IAS 10.
IAS 10 is nothing to do with consolidated financial statements. This okay. IAS 27 is one. We call it standalone financial statements. Then IAS 28 is one, which is accounting for and joint venture. Ifrs 3, business combination. I hope you said 10 referring to this proverb. So this is consolidated financial statement. And then we also have Ifrs 11, interest in joint venture. Ifrs 13, fair value measurement. So our discussion will be get on with all these standards. Introduction to groups. Here we are going to learn all these areas. Describe the concept of a group as a single economic unit. Explain and apply the definition of a subsidiary within relevant accounting standards. Using accounting standards and other regulation, identify and outline the circumstances in which a group is required to prepare consolidated financial statements. Describe the circumstances when a group may claim exemption from the preparation of consolidated financial statement. Explain why directors may not wish to consolidate a subsidiary and when this is permitted by accounting standards and other applicable regulation. Explain the need for using coterminous year and uniform accounting policies when preparing financial statement. We will discuss that. explain the objective of consolidated financial statement, prepare consolidated financial statement of financial position for a simple group, parent and one subsidiary and associate, dealing with pre and post acquisition profits and non-controlling interest and consolidation, consolidated goodwill. So these are the topics that we will be covering. Remember, since our exam are computer based, the questions are not necessarily a very extensive essay type writing questions. You will get a huge question, but it's like more of a space blank filling exercise. So that type of scenario you need to remember on. Fine. Now here certain definitions you need to know. What are those definitions? Very first definition is parent. Who is parent? With regard to consolidation or group accounting, the parent is where that entity having an investment on another entity when they have the control over that entity. Important point is the control. Maybe sometime regardless of investment. I cannot rule out fully they don't have investment. Regardless of the size of the investment, as long as the parent has the control over the other entity, then the entity who has the control, you call it parent. So you can write it down. An entity where the parent has the control over did I say parent?
Yeah.
No. An entity where the has the control, not is the parent. Entity where has the control. You can remove this, but that's it. It's already written. Has the control over another entity by means of investment or otherwise. By means of investment or otherwise is known as parent. So let's say A acquiring B. Now the B's share capital 200,000 number of shares, whereas A acquires 150,000 shares. So in this situation, A becomes a parent for B by means of acquiring majority number of shares of B. So we call A as a parent. Right. The second one, subsidiary. Now, what is subsidiary actually? Where an entity exposes their control over this entity, or that entity is being controlled by another entity. Then this entity becomes subsidiary. You can say that when an entity is being controlled by another entity, controlled by another entity by way of investment or otherwise. Then such entity becomes a subsidiary. Now the third definition we need to understand also. Control. What do you mean by this control? When you say control, they have the control means what they can do. So when any entity has a control over another entity, in the context of our discussion, that means that they have the power to exert over the other entity for several activities, such as they have the power to regulate the activities of the business. They have the power to participate in the operating and financial policy decision making. They are the final says. They only say yes or no. Okay, so this is second. Third one, they also have the power to appoint or remove any board members in the in that entity. Fourthly, they also have the power to dominate. Let's say this subsidiary has an outsourced contract, annual maintenance contract with one company. Now this subsidiary is being controlled by a parent. Now the parent can decide to change that service provider. So any third party agreement can also be amended or changed based on their powers. So these four characteristics or 4 points should be looked into when deciding whether they have the control or not. So mainly the very first and foremost point is that they have the power to make the decision of operating and financial policy. So you can say that when an entity has the power to make operating and financial policy decisions, and so that is one pointer. Secondly, the entity has the power to appoint or remove any board members of that entity. Third, an entity can involve in any of their business activities at any time. Any of their business activities at any time. Fourth, when an entity has the power to regulate any third party agreements. So these are the 4 ways in which the control comes. Now the next question is how you can secure the power of control. These are the outcomes when you have the control, but how you can gain the power control? You can answer if you want.
No, sir.
Yeah. So next is the ways in which power can be secured. When an entity acquires acquires the majority of, when an entity acquires the majority of voting rights of another entity. Now here you need to understand a little more how you acquire voting rights. Now normally in this example what I have written here, you have 200,000 shares of this company and company A acquires 150,000 shares. Now indirectly the company A acquires the voting rights of company B. However, does not necessarily mean that when you acquiring 150,000 shares of 200,000 shares does not necessarily mean that they have acquired the majority of the voting rights. So you should specifically ensure that the company has acquired or secured the majority of the voting rights. So one direct way of acquiring is acquiring by shares. So normally 99% of the time when you acquire the shares of the company, effectively you become the majority of the voting rights. You have the majority of the voting rights. However, there could be certain situations, although you have the majority of the number of shares, yet you may not have the power of majority of the voting rights. So you got to be clarifying that very carefully. Sometime in the exams, in deciding whether this company is a subsidiary or not, that will become a pointer. Got it? So, so what we said there, that
When an entity acquires the majority of the voting rights of
normally this could be achieved. Normally this could be achieved by way of acquiring ordinary shares of the company through investments. However, at certain times, the majority of the voting rights could also be achieved, could also be secured.
majority of the voting
Rights could also be secured by virtue of agreement. How I'll give example. Now, Qatar Petroleum signs up agreement with foreign companies to form joint ventures here. Some example, North Oil Qatar, before it is Maersk Oil, or Total Energy, or Exxon Mobil. So the majority investors are those companies. But who consider the parent? Qatar Petroleum considers the parent. Why? They have the power in regulating every activities. So it is not through investments. They have acquired the majority of the voting rights by virtue of an agreement. Is that clear? And also another way, on the other hand, when an entity can represent major technical skills, when entity can represent major technical skills, then that also considered to be having the majority of voting rights. Okay, one more definition. Group. Any issue?
Shall I stop and start?
Yeah.